I don't know whether last year was so bad because there was just a mismatch between the price people wanted to pay and the ones that actually they wanted to sell. And does that get adjusted this year?
Well, last year the problem was interest rates were very high, and sellers were afraid that if they sold to somebody, they probably weren't going to get the price they wanted because buyers didn't want to pay the price because interest rates were high. And buyers were afraid that they were going to buy into a recession.
Yep.
They thought the recession might come.
Right.
They look stupid by buying it or something, and it goes into recession. Now the recession fears are gone. Interest rates are coming down almost certainly very soon. So I think you'll see a lot more M&A activity and a lot more private equity activity.
Are you expecting 6 Fed cuts? I mean, that seems excessive.
I think trying to predict what the Fed's going to do precisely is a fool's errand. The Fed's going to do what it does based on the data. But right now, I think the markets will be shocked if the Fed didn't cut before the election. Now, the Fed will, I think, have political problems if they say we're going to do some cuts right around the time of the presidential election, because you can be sure Republicans would say you're just trying to help the Democrats. So they're going to get their cuts out of the way. They're going to meet in January, and then I suspect they're going to talk about what they're going to do in the March FOMC meeting. And I'd be very surprised if there isn't some cut by March.
Yeah, but in terms of deal making, I mean, would people not wait for the U.S. election to know who's in charge in the White House? Because that could change also regulation, rules, foreign policy, everything, really.
Well, there's no doubt that the current antitrust enforcement is not that favorable to a lot of bigger acquisitions. But private equity tends not to be doing things that the antitrust officials care about that much because they're kind of standalone acquisitions. So that's not been a big problem for people. It's really been the interest rates and the concern that there might be a recession coming, but I think that concern is gone.
We've seen some big deals in private equity, especially in infrastructure, with BlackRock buying GIP. We have Actis and General Atlantic. Is this going to continue? Are we going to see a lot more of these already big, sizable deals? Well,
the consolidation that's going on in private equity, I think, will continue. The BlackRock deal is a very good deal for BlackRock, I think, and a very good deal for the firm that sold it to them. That's a very good firm. GIP is an excellent firm. It's a high price, some people would say, but I think it will work out well for everybody. I think you'll see more consolidation, particularly in infrastructure, because infrastructure is an area that people like, relatively predictable rates of return, and there's a lot of interest among investors in investing in that class. But yeah, I do think you'll see more consolidation, and some of the bigger firms will get bigger.
But this is what with infrastructure, because infrastructure is really what we need if we're going to build this new future, or private equity in general?
Well, private equity in general, but infrastructure is a class where a lot of the big private equity firms don't have a gigantic infrastructure business, so they might want to add to it. Some do have businesses that are big already, but our infrastructure is a very predictable business. It's a very predictable rate of return business, and it's one of the ones that I think a lot of investors increasingly think is a good area to invest in. Remember, in the administration in the United States, the Biden administration has gotten a very big infrastructure bill through Congress, and a lot more infrastructure can be built in the United States, but that's true around the world.
David, do you worry about, private equity, maybe some of the spaces that are smaller where they're in debt if actually interest rates don't go down quickly? Are some of the smaller companies in trouble, like real trouble?
Well, there's always a way you can get attention by saying things are in trouble, things are falling apart. But right now, despite the fact that interest rates were so high and the economy was not wonderful for a while post-COVID, I think now we've seen relatively few bankruptcies and relatively few distressed debt opportunities. I think you'll see a lot of distressed debt opportunities in real estate, because I think commercial real estate really hasn't seen the worst of probably the debt problem that's going to occur. But I think it's different in other parts of the private equity world.
But why? So is it a delayed effect, or just it's more resilient than we thought it would be?
Because the debt in real estate and in corporate acquisitions is now often what's called covenant light.
Fine.
So unless you actually default in paying the interest, you don't have the problems of the banks taking over the debt. So it's easier to stay alive when things aren't working well than it was 10 or 20 years ago.
Where are you seeing, or where do you want to make deals?
Well, where nobody else wants to make them. I want to find things that nobody else is looking at. There are a number of areas that I think are going to be attractive in the future. One of the ones that people are talking about here is, of course, obviously, artificial intelligence. Everybody wants to be in artificial intelligence. But another area that hasn't gotten as much attention, but I think will in the next couple of years, is something called quantum computing. Mm-hmm. Quantum computing will change computing dramatically by speeding up the way computers move and make decisions and so forth. So I think that's an area that you're going to see a lot of activity. I think CRISPR technologies are going to be an area where we see a lot of activity in the future, a lot of biotech-related things, computational biology, data science. There will be a lot of areas that I think you'll see a lot of growth.
But that needs more energy. Do you also invest in some of the companies of tomorrow when it comes to energy, or is it too crowded?
Well, energy is crowded in some respects. Right now, it's not crowded in the traditional oil and gas sector. Right now, large institutional investors are a little nervous about investing in oil and gas, unfortunately, in my point of view, because it's still something that we need. Now, obviously, everybody wants clean energy. Everybody wants to get rid of carbon emissions. But I think for the foreseeable future, at least during my lifetime, it's not likely we're going to go to carbon neutrality completely.
But so how do you look at AI? It's going to make us more productive. It's going to, stop us from, well, we don't have to learn PowerPoint anymore, which is only a beautiful and good thing. But where do you want to be invested in?
Well, AI, the big issue is, are you going to be better off investing in the small startup AI companies, or are you going to be better off investing in the Microsofts and the Googles? Who's going to do better? Nobody really knows yet. But I do think there's opportunities in both places. There are a lot of AI companies. In fact, every company I see in the venture space today says it's an AI company. So everybody says they're AI some way or shape or form.
But this is not a bubble, right? This is not like the Goldman Sachs.com era of like 2000 where everyone suddenly became an internet company.
I would say that bubbles, you only know you're in a bubble when it bursts. So right now, it doesn't look like a bubble, but if people pay crazy prices for startup companies that have no revenue, no prospect of revenue in the next 4 or 5 years, it's a problem. But I do think that you are seeing fairly high valuations in some artificial intelligence companies now. Maybe it'll turn out to be a bubble down the road, but everybody's afraid of missing out. There's a great human tendency to be afraid of missing out on something. And so people are afraid they're going to miss out on the AI trend, and they don't want to miss out on it. So people are putting a lot of money in at relatively high prices.
So is that one of your, investment advice? Don't have the fear of missing out, because you started by saying you want to be where no one else is.
Well, as a general rule of thumb, you're better off to invest where other people aren't racing to go into it. I don't want people to look at the things I'm looking at, because then the price will go up. But clearly, there's a lot of interest in AI. And AI has, a year ago when you were here and I was here, we weren't talking about AI as much. AI has really been almost dominant in Davos this time, because everybody is worried about what AI is going to do. They want to make sure their company is able to deal with AI, or they're not going to be hurt by AI, but they also want to be helped by AI.
Yeah, but how do you see it developing? I mean, I was just speaking to someone from Meta. They were saying, we'd have personal assistants to do, for example, parent stuff and work stuff. That is, 10, 20 years away, or could it also just never come true?
It's too hard to predict 20 years down the road, or even 10 years down the road, or 5 years. Who would have predicted in 2000 that the internet would change the world as we know it? At the point there, in 1999, 2000, people thought the internet was a bit of a bubble, and a lot of companies went under. Right now, the internet has changed the way we live, and probably will forever. I suspect AI will have a big impact, but we don't really know. We're in inning one of a 9-inning game.
But so again, how do you make that investment choice then?
I don't want to give out all my investment secrets, but I would say that generally you're looking for people that know what they're doing, that really have a desire to build a company, not just make money. You're looking for people that are going to work around the clock and actually have some technology knowledge. But you take a look at the great entrepreneurs of the last 20 years. Steve Jobs, Bill Gates, Jeff Bezos. What did they have in common? They walked through walls, they believed in what they were doing, and they had a passion that you couldn't replicate easily. And obviously there was some luck along the way, but the great entrepreneurs are going to be coming along in the next generation as well, and probably will be in AI.